Ever wonder what's happening with Rndr crypto? Well, my friends, it's been a roller coaster ride lately. We're talking about a significant decline, a nearly 8% drop due to the failure of our bullish friends to keep the price above the 50-day exponential moving average. Not a one-off, but a trend that's been persistent in 5 out of 6 intraday sessions. That's right, the market's showing some weakness. We're navigating through bearish waters, with technical indicators pointing to the possibility of further decline in the short term. But it's not all doom and gloom. The price is still hovering above the 200-day EMA, offering a glimmer of hope for a potential recovery. And yet, the moving average convergence-divergence lines are showing a bearish crossover, reinforcing the likelihood of a continued price decrease. So here's the million-dollar question. Can Rndr crypto crash below the $7 level? That's what we're going to explore today. So let's delve into the details and find out what's going on. Rndr crypto has taken quite a hit recently, experiencing a significant decline of nearly 8%. The bulls, those optimistic investors who push prices up, have failed to maintain the price above the 50-day exponential moving average. This is a pretty significant indicator, and it's a sign that bullish sentiment is waning. Now, you may be thinking, what's this 50-day exponential moving average thing? Well, it's a type of moving average that gives more weight to recent data. By failing to keep the price above it, it suggests that the recent bullish sentiment is failing to hold. This can be a red flag for investors, signaling a potential downturn. But the signs of weakness don't end there. This downward trend has persisted in 5 out of 6 intraday sessions. Intraday sessions, for those unfamiliar, refer to a single day's trading within the markets. Now, when we see a slump like this across the majority of sessions, it paints a clear picture of weakness in the market. And it's not just the numbers that are telling us this. The overall sentiment in the market also leans towards the bearish side. A bearish market is one where prices are falling and investors are selling off their holdings. It's a stark contrast to a bullish market where prices are on the rise and investors are eager to buy. This weakness in the market is certainly causing some concern, but is there more to it? Technical indicators are suggesting a potential further decline in the short term. Now, what does that mean? Well, let's dive into the world of technical indicators. Imagine them as tools in a financial analyst's toolkit, used to predict future price movements based on historical data. They're like the weather forecast for the financial market. Not always perfect, but they give us a good idea of what might be coming. Take the moving average convergence-divergence, or MACD, a popularly used indicator. It's a trend-following momentum indicator that shows the relationship between two moving averages of a crypto's price. The MACD triggers technical signals when it crosses above, to buy, or below, to sell, its signal line. The speed of crossovers is also taken as a signal of a market is overbought or oversold. In the case of Rndr crypto, the MACD lines have shown a bearish crossover. Now, bearish might sound like financial jargon, but it's just a term used to describe a market condition where the prices are falling or are expected to fall. A bearish crossover happens when the MACD line crosses below the signal line, a potential sell signal. This crossover is reinforcing the likelihood of a continued price decrease for Rndr. But here's where it gets interesting. MACD is just one of the many indicators. While it may suggest a bearish trend, other indicators might tell a different story. It's like getting a second opinion on a medical diagnosis. You wouldn't rely on just one doctor's opinion, right? Similarly, financial analysts look at multiple indicators to get a holistic view of the market. So while the MACD and other indicators are suggesting a potential further decline in the short term, it's important to remember that these are predictions, not certainties. In the unpredictable world of cryptocurrencies, anything can happen. These indicators paint a gloomy picture, but is there any hope for a recovery? Stay tuned to find out. Despite the bearish sentiment, the price of Rndr crypto is still above the 200-day EMA, offering a glimmer of hope for a possible recovery. Now, you might be wondering, what's the big deal about the 200-day EMA? Well, in the world of trading, the 200-day exponential moving average, or EMA, is a significant indicator. It's often used as a key line of demarcation to understand the overall trend of a market. When a cryptocurrency's price is above this line, it suggests that the general trend is bullish or upward. Conversely, when the price falls below, it indicates a bearish or downward trend. So, the fact that Rndr crypto is still above this line, despite the recent slump, offers a beacon of hope. It suggests that the overall trend could still be bullish, and a turnaround might be on the horizon. But it's important to remember that this is just one of the many indicators traders use to predict market movements, and it's not a guaranteed predictor of future performance. Now let's talk about potential recovery. The crypto market is famously volatile, with prices capable of swinging wildly in short periods of time. This means that even though Rndr crypto is currently in a slump, it could still bounce back. A recovery could be triggered by a range of factors, from a shift in market sentiment to positive news about the coin's underlying technology. It's also worth noting that, despite the current bearish sentiment, Rndr crypto has shown resilience in the past. There have been times when it's weathered similar storms and managed to bounce back. So, while the current landscape may look a bit bleak, it's not a definitive forecast of what's to come. And finally, it's crucial to remember that investing in crypto is not without risks. The market's volatility means that prices can go up as quickly as they can come down. So always make sure to do your own research and consult with a financial advisor before making any investment decisions. So, while the short-term outlook may be bleak, the possibility of a recovery cannot be ruled out. So, can Rndr crypto crash below the $7 level? This is the question we've been wrestling with throughout our discussion. We've looked at how Rndr crypto has experienced a considerable decline, nearly 8%, due to the bull's inability to maintain the price above the 50-day exponential moving average. Over the course of 5 out of 6 intraday sessions, this downward trend has persisted, signaling a weakness in the market. The overall market sentiment leans bearish, with technical indicators pointing to the possibility of further decline in the short term. But it's not all doom and gloom. The price remains above the 200-day EMA, suggesting that there might be a glimmer of hope for a recovery. However, the bearish crossover witnessed in the moving average convergence-divergence lines reinforces the likelihood of continued price decrease. Only time will tell what the future holds for Rndr crypto. Stay tuned for more updates on this and other crypto trends.